Welcome to today's market report. European stock markets are seen opening mixed on Thursday, helped by strong gains on Wall Street after the Federal Reserve reiterated its support for the US economy, but weighed down by disappointing corporate news, particularly from the auto sector. DAX this morning traded 0.4% lower, FTSE 100 rose 0.1%, CAC 40 climbed 0.3%. Late Wednesday, the Dow Jones Industrial Average closed 0.6% higher, the Nasdaq gained 1.4% and S&P added 1.2%. After the US Federal Reserve capped its benchmark rate near zero and suggested rates could remain in its range for some time. Chairman Powell said the economy will need high levels of accommodative monetary policy for an extended period. This now puts the focus squarely on Capitol Hill to see whether Republicans and Democrats can reach a consensus on the latest stimulus measures before the expiry of some existing measures on Friday. Second quarter GDP figures are due for release later today in both the US and Germany and will review the depths of economic fallout from the pandemic. Expectations are for an annualized decline in US GDP of 34% on the quarter and an absolute decline of 9% in Germany. July unemployment figures from Germany will also be studied carefully. So far, job losses have stayed relatively contained in Europe thanks to government's job retention schemes, but this cannot last forever, and earnings data so far has suggested many companies remain under pressure. Airbus Group announced a fresh cut in production of its A350 long-range jet on Thursday as it posted a larger-than-expected second quarter loss. French carmaker Renault posted a record net loss of €7.292 billion in the first half of this year, while German rival Volkswagen unveiled a first-half operating loss of €800 million, forcing the carmaker to slash its dividend. Oil prices were largely unchanged on Thursday, trading 0.1% lower at $41.222 per barrel for US crude. For Brent contract fell 0.1% to $44.06 per barrel. Gold futures were flat at $1,953.40 per ounce. On the FX front, GBP USD fades upside momentum from 130.13, the highest since March the 10th, and is down 0.35% on a day to 129.50 as Thursday's 4-hour chart is showing. The UK Health Secretary Matt Hancock said today, "I'm worried about the second wave of COVID-19. On quarantine guidelines for travellers from Spain," Hancock said, "we are working on possible ways to release them earlier by adding testing." This is on the back of news from The Telegraph that the UK is set to cut quarantine period for travellers from Spain to 10 days from 14 days. According to the FX Street, GBP USD is on the back foot as the Fed and dovish decision triggered a force break above 130 as expected, and the downfall is sending the cable below the uptrend channel. German GDP is due 9 o'clock this morning. London time is expected to show the economy contracted 9% quarter-on-quarter in April to June period, having shrank by 2.2% in the first quarter. A bigger than expected drop in the GDP reading won't be a surprise and could strengthen the bearish pressures around the euro, according to FX analysts. Although the reaction to the data could likely remain limited in light of upturn seen in German manufacturing sector this month, the dollar index was up 0.1% at 93.498, recovering a touch from the 93.273 level seen earlier, its lowest level in more than 2 years. This is today's market news. Thanks for listening. We'll see you next time.